Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I'll be taking you through how to adjust the consolidated retained earnings or what we call the group retained earnings. Let's look at the question. So we have the requirement. It says what would be the amount of retained earnings in Winslow's consolidated statement of financial position as at 31st March 2015. Now let's see the details. Winslow acquired 80% of the equity shares of Zeta on 1st April 2014. Reconciled to the year end 31st March 2015. That's 12 months. So it's a full year. When Zeta's retained earnings were 200, so the retained earnings at acquisition. Now, during the year ended 31st March, Zeta purchased goods from Winslow. So Winslow is the parent, totaling 320,000. At the 1st March, one quarter is 1/4. 1/4 of these goods were still in the inventory of Zeta. Winslow applies markup on cost, which is 25%. Now remember, because it is Winslow the parent who is selling, all the unrealized profit will be in the account of the parent, and the NCI will not share in the unrealized profit. So all the unrealized profit will be charged against the retained earnings of the group, which is to say the retained earnings of the parent. At the 1st March, the retained earnings of Winslow and Zeta were 450, 340. So these against 200, this will give us the post-acquisition reserves or profits. So the post-acquisition reserves. Now, let's see how we can draw up the pro forma. So for the group retained earnings, I need the parent retained earnings, and that was given in the question to be 450. So that's 450. Then I need share of post acquisition profit or reserves, and that is the 340 we were given less 200. So look at it, 340 at the end, 200 at acquisition. The difference will give us the post acquisition. So times the parent percentage. So the parent percentage is 80%. So 340 minus 200 times 0.8, that is 112. Now the other adjustment we need to do is to find the unrealized profit, and the total goods sold was 320 and 1/3 was in inventory. So let's see. So the less PURP, and that would be 320 times 1/4 times the markup, which we have to convert to margin, which will be 25 over 125. So let's see, 320,000 times 1 divided by 4 times 25 divided by 125. That gives us 16,000, and this should be deducted. So the adjusted retained earnings should be 450 plus 112 minus 16, and that should be 546,000. So with this, let's see the options. That should be option D. Now remember that there are other details that are relevant where we are adjusting for the group retained earnings. So, for example, where there is an impairment loss, so where we have an impairment loss, so impairment loss is deducted. So the impairment loss on the subsidiary, on the sub, impairment loss on the sub is deducted. Where there is impairment loss from associate is also deducted. And then we can have the share of profit from associate is added to the retained earnings. And where the subsidiary is the one who sold goods and there's unrealized profit, we say their share of PURP. So we take the unrealized profit, then take their percentage, and that will give you the value. And unrealized profit will be deducted. Same way, depending on the measurement of goodwill, if it is fair value, then we take their percentage of impairment. But if it is proportionate, then we take the full impairment to the parent retained earnings, plus or minus any other adjustment that will be relevant in the question. So I hope this helps you in your preparation for the FR exam. Please remember to subscribe to this channel to receive updates on new videos.